All right, welcome back. We've got some earnings update. I just recorded my Tesla earnings video, so take a look at that if you want to deep dive on Tesla. Today we're mainly going to talk about Microsoft, Meta, and Apple, but let me get a swig real quick. Okay, so let's start with Microsoft. Microsoft's revenue, this is a great income statement here. Revenue at $69.6 billion, that's up 12% year over year, led by Azure. We've got the commercial platform 365, that's up to $21 billion, up 15%. Gaming is up 7% to almost $7 billion. LinkedIn, almost $5 billion. Windows and devices like this computer that is running this program right now, up to $4.5 billion. Search, which I don't know how they make money on search, I guess just advertising, is $3.5 billion. And then other is up to almost $6 billion. So overall revenue up 12%, gross profit of $47.8 billion, very profitable company. Operating profit, or let's go to net profit of $24 billion. So it was a good quarter. This is a solid business, no question about it. They beat their estimate by almost $1 billion. Their EPS was above expectations of 13 cents. But the stock was down 6%. And the reason for that is the cloud. So their cloud still did very well. It grew 20% year over year. And services for the cloud was up 157% year over year. But I believe their guidance for the cloud was a little soft. So they have been spending a lot of money on AI, and they're building out of their cloud and data centers. For them to show a little softness on the guide spooked the market a little bit. This is on top of all the DeepSeek stuff. So interesting to see there. I did think it was very interesting to also see their AI business surpass a $13 billion run rate. That's up 175% year over year. So $13 billion on AI, that's no joke. So they're doing really well there. Gross margin at 69%, operating margin of 45%, phenomenal. CapEx is up almost 100% to $23 billion. So they're spending double the amount of money that they spent last year, and that's again on AI infrastructure. Challenges: growth in the cloud is slowing slightly. Azure's growth decelerated from 34% to 31%. So cry me a river, right? They're still growing at 30% plus. It just went from 34% to 31%. But again, the law of large numbers. It's hard to continue to grow at the same rate when the numbers are larger. So stock was down 6%. Azure still represents 40% of total revenue, and net profit of almost $22 billion. Unbelievable. So when we look at the revenue by segment, again, this chart looks phenomenal, but a little softer than expected for the market here. Mr. Market, I'm surprised to see Windows and Xbox. So again, you've got their legacy business here of the Word and the software side, LinkedIn. You've got the data center, and then you've got devices down here. Their smallest piece. So still looks very solid. And this is, again, what the market didn't like, that their growth is decelerating for their guidance. So not the end of the world to me, but I think this is more of the market is seeing the DeepSeek stuff, and they're saying, oh, Microsoft Cloud decelerating. But look at their AI revenue, killer. So I'm not worried too much about Microsoft here. I thought it was a B plus quarter, in my opinion. So now let's talk about Meta. Meta, $48 billion in revenue. That's up 21% year over year. Mostly all advertising, $46.8 billion in advertising. That's up 21% year over year. They had payments infrastructure, $500 million. I don't even know what their payments infrastructure is. Reality Labs brought in $1 billion. That's up 1% year over year for a gross profit of almost $40 billion. That's 82% margin. And for a net profit of $20.8 billion, that is up slightly year over year. Okay, so their EPS was the big deal here. So their EPS was up 50% year over year. So their earnings per share skyrocketed. That's $1.25 above expectations, which is just crazy. So they are becoming a lot more efficient. Maybe some of that is less spend on Oculus or whatever they were spending a copious amount of money. I know they have been doing a ton of layoffs, not a ton, but they're becoming very fit. That's been the whole Zuckerberg theme for the last few years, is getting fit for the business and for himself as well. So strong advertising growth, up 14%, driven by 14% ad price increases and 6% more impressions. I listened to their earnings call, and it was a very interesting earnings call. Zuckerberg is a top 3 CEO right now. Love him or hate him, he's operating at a very high level. He's only 40 years old, and he is doing all the right things for this business. Say whatever you want about him, but he's operating very well as a CEO for this company. They talk a lot about AI, and they talk a lot about how AI is really helping them with their advertisements. That's my crock pot is done. So it's very interesting how they were mentioning how they were able to take AI and figure out, okay, what ads are going to make this more and make better impressions on the consumer. So this is going to help the people that are spending on the ads and the people that are seeing the ads. So I expect more of that to come. But it was a very interesting earnings call, the things that they are working on. And, they're a huge player in AI when it comes to Llama, and you don't see any of that on their revenue yet. So I don't know if they're just going to focus on advertising when it comes to that, or if eventually there'll be another income stream here for AI. But right now, we don't see anything. Reality Labs, $5 billion loss, heavily investing in the metaverse. They've got their glasses coming out, so we'll see here. Capital expenditure guidance of 60 to 65 billion. That is going to be up 70% year over year to bolster AI infrastructure. Meta AI expected to reach 1 billion users in 2025. So that's great, right? What other company will be able to snap their fingers and say, hey, here's an AI model, here's an AI agent, and offer that to all their users? Meta has, I want to say they said 3 billion users across their platforms of Facebook, Instagram, WhatsApp, Oculus. So they have a lot of people using their products. If they're able to wedge in there an AI product that people will pay for, that's going to be a huge winner for them. So we'll be watching to see how they add AI into their products. So the concerns here is the guidance between 39 to 41 billion fell short of $1 billion. Growth slowdown worries. We'll have to wait and see how that looks. They're adjusting their political strategies. I'm sure you have all heard about that. We're not going to talk politics on this channel, but the key takeaways: the stock was up to an all-time high. It was up 3%, reached an all-time high. Again, people are very excited. I'm very excited about the story here, how they're going to use AI. It's open source. They have all the eyeballs. They've got this cash cow behind it when it comes to advertising that can fuel whatever they want to do in AI. And they're operating at a very high level right now. So the story looks very, very good for Meta. If we were to get a big pullback or any just sudden drop in Meta or the market, this is the one that I'm looking at adding. So also, Microsoft and Meta still are looking to spend heavy on NVIDIA. Maybe their thoughts will change with the DeepSeek information. Maybe they can find other ways, but it sounds like they're going to spend a lot. Zuckerberg said that they're looking to build a data center that would cover a large part of Manhattan. I don't know if that's what that looks like, but we'll have to wait and see. So Meta, A quarter. Great job. Not A+, but an A. Apple, services growth offset China weakness. So let's take a look here. Revenue, $124 billion in revenue. That's up 4% year over year. Their overall products between iPhone, Mac, iPad, watches, AirPods, 98%. That's up 2% year over year. It's crazy to me how just watches and AirPods are almost a $12 billion business in a quarter. So killer. Services, $26.3 billion, up 14% year over year. That's more than Tesla had in overall revenue. Just their services. Phenomenal. Again, this is that 30% sliver that they get to take on every app store purchase, which we'll see if they'll continue to be able to do that. That seems like, to me, that seems like a racket. I would be very upset if I was selling a service and people were, I was getting skimmed 30%. So we talked about the revenue, EPS, iPhone revenue, $70 billion, down 1% year over year. Let's see, services margin, 47% margin. Yep, looking good there. The China weakness is the big news when it comes to Apple. China sales were down 11% year over year. Competitive pressures and inventory adjustments. I switched my phone to the little foldable Samsung thing. So I switched from an iPhone. I wanted something different. I didn't see a reason to go buy another iPhone. I wanted to try something totally new. I'm a technology nerd, so I wanted something new. iPhones are great. Apple's great. I just wanted something new. And it sounds like in China, same thing. So competition is rapidly evolving and Apple is kind of stale. That's my opinion. Still great products, but I wanted something new. Let's see here. Not a whole lot going on here. Well, one thing I want to touch on that was interesting was when all the AI noise with DeepSeek came out, all the stocks were down and Apple was up. So I think that was the market saying, we don't care who wins, if it's Meta, Microsoft, Amazon, we don't care who wins. We all know it's going to run through Apple devices and Google devices. So those two stocks held up pretty well in the Monday sell-off when it came to DeepSeek. So I thought that was an interesting reaction. We'll have to see. And also, if Apple doesn't have to pay so much for OpenAI or whoever they are going to partner with for AI services, that's probably a good thing for them. So Apple, I give them a B quarter. Not a ton of growth, but in my opinion, Apple is just a cash cow right now. Until they come up with another product or service that really gets the revenue growing. The revenue's been pretty flat for the last couple of years, which no problem with that. They're just a cash cow. They're getting 36 billion of net profit a year. I'll take that all day. So you don't need to be growing at 20%, 10%, as long as you're not drastically shrinking. So they're doing just fine. Key takeaways from big tech: AI investment continuing to surge. You've got the cloud dominance is still there. Ad revenue resilience. We're not seeing a slowdown in ad revenue. Last time we saw that was in 2022. That's when we had multiple quarters of negative GDP growth, which is defined as a recession, but they didn't want to call it a recession. So we will see if we have another slowdown in the economy, if that really hits the ad market again. And that's why you saw Meta really take a hit, is because their ad revenue was going down and they were spending like crazy on the metaverse. That's why the stock went down to $79. But look at it now, baby. Over $700. Crazy ride. Geopolitical risk. So Apple facing headwinds in China, Meta with the new political stuff, and Microsoft with the global AI regulatory scrutiny. And I would say for all these companies, the whole DeepSeek stuff, China competition will be an interesting wrench thrown into this. So these companies did very well. Next week, we are looking forward towards Google, Amazon, and I'm sure someone else. But that is all I got for you guys for this video. Good quarter all around for these businesses. So that's good to see. And until next time, have a great rest of your weekend. Peace out.